Welcome back to the Market Day Report. I'm Marlon Bowling with you. We're coming down the home stretch of our trading session on Wednesday. Well, let's review our grain trade for you and see if we can hang on to the gains that we've been seeing most of the day here in the grain trade. We'll start with that corn market here. Corn most of the day has been trading about 4 to 5 cents higher or so. And now as we head toward the close, we have December still hanging in there at 3.53 3/4. So we're still 4.5 cents higher per bushel. March is up 3 3/4 at 3.62 3/4 per bushel. Meanwhile, on the soybean trade, we have the November up 14 1/4. Wow. January 13 3/4 higher at 10.16. That is just a penny from our high of the day, almost 16 cents off our earlier low. March up 13 1/2, trading at 10.23 per bushel. Same story there, about a penny off our high of the day. Let's go right to the trading floor in Chicago. We have Todd Bubba Horwitz standing by. He's with BubbaTrading.com. And there he is right now. Thanks for joining us here, Todd. Pretty good firm action here in the grain trade with harvest underway. It sounds like maybe the combines get maybe a 1 or 2 day reprieve here, though. Huh?
What do you say, Marlon? You know, look, we were looking for stronger action. I think now we're probably near short-term highs, okay? Overall, I'm bullish. I like the space. I think we're going higher. But I think for the short term, I think we're reaching short-term levels. I think 10.20 in Jan beans would be about as far as I can see them going here for the time being. I'd like to see a little bit of pullback, and I'd like to see 10 hold on the way back down the next time. So I like it, but I do want to see a little bit of sell. I would not be bringing in new money here as a trader to buy here. I think they have some work to do back on the downside to kind of work back and fill, and they will build a much stronger base and bring in more new money. That's how I see beans. I think that corn, as long as we can stay above 345, and now maybe we'll make a new base at 350. Corn looks good. It looks like it's got 365 in the near term and potentially to 380. I think that looks very solid. So I think overall, I think we're in good shape. We've taken, once again, we've taken the punches from everybody and all the bad stuff that could affect us, and now we're starting to resume and starting to bring prices back to some reasonable levels again. And I think that will continue because we've already priced in the dollar being at $1 and all the other bad news that's been around. That's what happened. We suffered first, but now I think we're starting to see some nice action and some nice upward movement. However, I do look for a little bit of a sell-off in the wheat market. Looks great. I mean, as long as it stays above $4, I'm a buyer of wheat until it shows me that it can't go higher. And I think wheat will have a pretty good pop here coming up here sometime shortly.
So realistically, though, how far can we take a bull run on the corn and soybeans and even on the wheat for that matter?
You mean overall?
Yeah.
I think we can go to 380, 385 in corn. I think we're going over $5 in wheat. And I think soybeans could go back to the mid-11s if we can get the right kind of action. Now, again, there's a lot. We need a lot of good things to happen, but we've already absorbed everything bad that could possibly happen. We've already taken all the bad news. We've already had, and as you know, the money comes out of the commodity space first before anywhere else because there isn't dividends in there. So right now, I think you might see some money flow in. The market might start to sell off here. That would even bring more money in. It would bring more of those alternative traders in. So again, I think we have room to go to the upside. But first, I believe you've got to see some sell off here a little bit, small.
What kind of time frame are you talking about, though?
I mean, I think we can get there. I think we can get to 365 to 380 in corn in the next 4 to 5 weeks.
Really? Okay. So you're thinking well before the end of the year then?
Oh, yeah. No, I'm thinking, you know, as I've recommended, I want people to store if they can afford it. It's not too costly. I mean, there's obviously, you have to weigh the cost of storage to what you're going to make and get back. But I think we've got some nice upside here if we can hold these levels and start to move forward. So we stay above 345 and build a new base, let's say 350, 355. Then I think we keep going. Again, to me, 360, 365 is the first level that we now have to get through. That was like trying to get through 345 on the way up. If you look, it took us about 3 weeks to get through there. But I think we've got a chance. And once we get through there, I think it's a much bigger run. And that might be the end of it, but that'll give us a chance to liquidate and get out of the stuff that we're going to store for a while. Interesting.
Let's take a look at Chicago wheat right now in December. We're 8 1/4 higher at 412 1/2. Let's jump to the cotton market here where we have December showing a big turnaround today. After having a low of 68.22, now we're at 69.46 cents per pound, and that's up 97 points. We're going to be back talking with Todd Bubba Horwitz more about the markets, including the livestock trade and maybe what's going on with the dollar and crude oil when we come back. And we're back with you here on the Market Day Report. I'm Marlon Bowling. We're talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago. He's there right at the edge of the CME Group trading floor. And as we take a look at the livestock trade, I want to pause before we quite get there, Todd, if you don't mind. And I wanted to get your input on what's going on in the crude oil market today. You know, you and I had talked earlier in weeks past about maybe some buying points for guys to look for as they lock in their energy needs for 2017. And then it seemed like there seemed to be some interference in the market. Russia was getting in there saying that they wanted to put a lid on production, and that really put a spike in the crude oil prices. You know, early on, a lot of folks were looking at maybe the $40 mark. What do you think about that now?
Well, first I want to say that you can hear me on XM 147 because I want to make sure we get that. And I want to say happy birthday to Katie. But anyways, at the end of the day, I think that we're at a level now. We had panic fear on OPEC. We had panic fear on the hurricane. We had panic fear on Russia. That's all gone now. Markets says this morning, you and I talked at 7:30 this morning, the markets were lower. They rallied all the way up on the draw, and now they're back lower than they were this morning. My first target is 46, but as far as farmers and producers locking in, I'm looking for 40 before I would think about locking in. Now that can change, but for right now, I say we go all the way down to 40. You got to be patient and not chase them up. That's one of the key things about markets. Don't get caught chasing them because they will come to you if you have enough patience. And I don't see them going back, into the mid-50s anytime soon. There's a greater chance they see 40, which is the target. I'm short crude and have been, and I'm not covering until it comes down to about 40 unless something changes between now and then. And so far, nothing's changed in my eyes.
And for our viewers, Todd and I were talking this morning on my Commodity Wrap show on Rural Radio about the possibility of reinvigorating our Bakken formation production, and he had some comments on that. I don't have time right now, but Todd, I want to touch on that hopefully next time I have a chance to talk with you, because that was very interesting, your feedback on that. Let's dive into the livestock trade right now and look at our live cattle futures for everybody. On the board, we currently have December live cattle 35 higher. We're trading at 104.25 per hundredweight. February up 50 cents at 105.05. And then if you jump over to the feeder cattle side, here you have November now up $1.37 like it has been most of the morning. We're at 124.02. Well, I say most of the morning, but it is well off of its earlier highs that were posted right after the open this morning, getting close to $2 off of that. January up 70 cents at 118.40. So how big of a fan are you on this cattle trade as it stands right now?
Well, at these levels, I'm not a fan. I've been a fan, as you know, and last week we said if we could hold the base lows, we would look for a rally. We've now gotten the rally. Now I'm looking at the fats 104 to 106. I'm looking now for a pullback to 102. Okay, I like the space. I want to be in, but I want to be in on my terms right now. And I think 102 is the right number to get back in. I think the feeders look like 124, 125, 120. Right in that area, right where they went this morning. I think that was a pure sign that we should see some of a pullback. Now, again, I'm bullish. I think that we now held the bottoms in which we made on all the panic, fear, and all this stuff that was going on. We held those bottoms, and we actually were able to consolidate higher for about 5 or 6 days. To me, indicates higher prices. So now I want to buy the pullbacks again. I'm looking for little bits of selling, and I think 102 in the fats and 122, 121 in the feeders would be great levels to get in.
All right, Todd, thanks for the comments, and I'll have you back on the Rural Evening News tonight as well. Appreciate that much. I want to take a quick peek here at the lean hog market before I let you go, and on the lean hog futures. On the big board, we have December down 32 market, 44.30. February still down 23 at 51.15, but all things considered, the recent run we had, producers would take that, I believe.
Very good, and he's a friend of the producer, BubbaTrading.com. A lot of great information.